And welcome back, folks, to Broader Financial Feature. In today's video, I'm going to discuss a utility dividend stock that should be added to your watch list. In today's video, it's all about Next Era Energy Inc., ticker NEE. So, NEE is a leading clean energy company. It owns Florida Power and Light Company, which is the largest vertically integrated rate regulated electric utility in the United States, as measured by retail electricity produced and sold, and serves more than 5.7 million customer accounts, supporting more than 11 million residents across Florida with clean, reliable, and affordable electricity. Next Era Energy also owns a competitive clean energy business, Next Era Energy Resources, which together with its affiliated entities is the world's largest generator of renewable energy from the wind and sun, and a world leader in battery storage through its subsidies. So, Next Era Energy is all about energy. So, let's break this company down a little further. So, one of the things I like to look at is the credit rating. B or higher. It has a Baa1, so we get a check mark there. Another thing I really look into is the dividend yield. Typically, I like a company with a 3% yield or higher. In this particular case, is a little bit on a low end at 1.92%, but I feel like this company does come with more growth potential than some of the other electricity companies like PPL. I think it's in a better market, and I think it has more potential long term. In addition, the dividend payout is 85% for the trailing 12 months. When you look at their 3-year dividend growth rate, it's about 11.53%, which I typically like to see 5% or more. So it's definitely killing when it comes to the growth of its dividend. So it's growing its dividend at a nice pace. It has a forward PE of 28, which is decent. One thing I like to look at as well is the shares outstanding. Typically, I like to look for a company that's actually buying back shares or at least keeping it even. They are increasing their shares outstanding, but I've noticed looking at some other utility companies, it looks like a lot of the companies have been increasing their shares outstanding. So it looks like it's kind of normal for this industry. In addition, when I look at the return on equity, it's about 6.24%. Typically, I like to see 12%, so it's more on the low end. And I like to see some revenue growth. Unfortunately, Next Era Energy revenue for the 12 months ending December 31st, 2021, was a decline of about 5% year over year. So that's something to keep a lookout for. They definitely need to do something to continue to increase their revenue, especially if they're going to continue to increase that dividend yield in the next couple of years. But I feel like it's in a hot market, and I think they'll be all right in the next year or two. I expect to see a little bit more of a correction there with the revenue, hopefully. And when you look at their 52-week high for entry point, I like to look at least a minimum of 10% from its high. Right now, the 52-week high is $93.73. 10% of that will make it $84.35. Currently, it's trading below that at about $82.37, give or take, depending on when you're watching this video. So that's something you can look out as well. In addition, one thing that's very important to me to look at is it's kind of one of those underrated things that people don't really look at, but I like to look at the 5-year chart, and I want to see if I would have bought this company 5 years ago, would I be in the red, equal, or green? For me, when it comes to dividend, I want to see some growth in when it comes to this the chart. Here, if I would have bought this company 5 years ago, I'll be up 150%, uh, just about, which is really, really good. So this is a company I like a lot, especially if you look at 2020, which was rough for a lot of companies. They were able to rebound and actually go up higher, which is I think is a good thing for this company long term. Overall, when I look at my 10-point system, it has a plus for credit, a negative for dividend yield, but obviously, this is actually a growing company, and the growth of the stock has been tremendous. The dividend payout is higher than what I would like to see it at, but it's a utilities company, so I give it some little wiggle room there. The dividend growth rate is solid, so it's definitely a positive there. The PE is okay. Stock buybacks, they're not buying back stocks. So I give them a negative there. I would definitely like to see them stop issuing shares as much, but hey, it is what it is. Return on equity, a little low on the low side. One thing I do want to see them is really focus on the revenue growth, which I think they could definitely see some increases in the next 2 to 3 years. Um, Florida seems like a growing state, so there should be some opportunities there to kind of grow their customer base in the future. And it is trading below its 10-week high, so it is all to the good. Well, that's pretty much it. Uh, I'm not a financial advisor. These videos are strictly for entertainment purposes only. Any investment that involves risk. So it's always important that you know what you're putting your money into. It doesn't matter if you're watching my channel or someone else's channel. Always know what's important to you and what you're buying because these are companies that you're actually going to own ownership in. But don't forget to like, comment, and subscribe. Until next time, check out the links below for more dividend stocks analysis, ETA index funds, and more. Until next time, peace.